All right, let's get right into it. A mortgage that lasts for half a century. Sounds pretty crazy, right? But it's a real idea being floated at the highest levels to try and tackle the housing crisis. So today, we're going to unpack what a 50-year mortgage actually is, what it would really cost you, and whether it's a brilliant solution for homebuyers or a really dangerous financial trap. And that really is the million-dollar question, isn't it? For so many people, especially younger folks, the dream of owning a home just feels completely out of reach. So when a radical idea like this pops up, you have to ask, could this actually work? Could stretching a loan over 50 years be the key that finally unlocks the door to homeownership? And look, this isn't just some random idea from the internet. This is coming from the director of the Federal Housing Finance Agency. They're basically saying they're laser focused on helping young people, and that this could be one tool, a potential weapon, as they put it, in a whole arsenal of solutions. So let's check out the firepower of this thing. Okay, first up, let's talk about the main selling point, the whole reason we're even having this conversation, the promise of a lower monthly bill. So the idea is pretty simple, right? If you take a big pile of debt and just give yourself more time to pay it off, in this case, an extra 20 years compared to a normal mortgage, then each payment should be smaller. It's kind of like choosing a 5-year car loan instead of a 3-year one. But how much are we really talking about here? How much do you actually save each month? So when you look at the actual math, it gets really interesting. Let's take a $400,000 loan. A standard 30-year fixed would run you about $2,480 a month. The 50-year option, which you'll notice has a slightly higher interest rate, comes in at $2,308. That's a savings of $172 a month. I mean, it's not nothing, but it's maybe a lot less than you'd expect for adding 2 whole decades to your loan. And that pretty modest monthly savings, well, that brings us to the other side of the coin. Because with loans, time is money. And in this case, it is a lot of money. Let's dig into the true cost of those extra 20 years. So here's the big question. We've seen the monthly benefit, but what's the catch? What is the real long-term price you pay for saving that $172 each month? This is where the story, well, it takes a pretty dramatic turn. And this chart, wow, it just lays it all out there, doesn't it? On the left, that's the total interest you'd pay on a 30-year mortgage. And the bar on the right, that's the 50-year. It's not just a little bigger, it's huge. We're talking nearly double the cost and interest, all for a relatively small break on your monthly payment. Let's put a hard number on that. Over the full 50 years, you would pay almost $500,000 more in interest. An extra $491,867 goes straight to the bank, all to save $172 a month. When you see it like that, the total cost is just staggering. So why is it so much more expensive? Well, this analyst, Logan Mahatshami, he breaks it down for us. Lenders see a longer loan as a much riskier bet. I mean, there's just more time for things to go wrong. So to cover that extra risk, they charge you a higher interest rate from day one. And that little bit of extra interest, it adds up to a mountain of cash over 600 payments. But believe it or not, the jaw-dropping cost isn't even the biggest obstacle this idea is facing. There's a massive regulatory wall that it would have to somehow get over. So let's say you were somehow okay with paying an extra $500,000 in interest. The problem is, the entire system as it's built right now just isn't ready for a 50-year loan. And it all comes back to a set of rules that were put in place after the 2008 financial crisis. Okay, so there's this key term you gotta know, qualified mortgage, or QM for short. You can think of it as the gold standard for home loans. QM loans have certain safe features built in, and in return, they get special legal protections. But here's the absolute kicker. A qualified mortgage, by law, cannot have a term longer than 30 years, period. So because a 50-year mortgage can't be a QM loan, it gets dumped into this other category called non-QM, and that creates 3 huge problems. First, the interest rates are even higher. Second, you, the borrower, get fewer legal protections. And third, they're a lot harder for lenders to sell on what's called the secondary market, which is basically the engine that keeps the whole mortgage industry running. Yeah, and this legal expert, James Brody, he really hits the nail on the head here. A 50-year mortgage isn't illegal, but because of all these rules, it just can't be sold to the big players like Fannie Mae and Freddie Mac. So unless the actual law is changed, this type of loan would be stuck in a tiny, expensive corner of the market. So when you put it all together, the crazy math, the regulations, the risks, what are we left with? Well, it really boils down to one fundamental trade-off. Let's just lay it all out side by side. On the one hand, the argument for it is that you get slightly lower payments, and hey, maybe it creates a new path for some people to own a home. But on the other hand, and it's a big other hand, you pay a vastly higher total cost. And you're taking on a riskier type of loan that falls outside of the standard consumer protections we've come to rely on. All right, so let's boil this all down. What are the big takeaways here? First, the monthly savings are surprisingly small. Second, the long-term cost is enormous. We're talking almost double the interest. Third, it faces a giant regulatory wall because of its non-QM status. But maybe the most important takeaway is this. The fact that we're even having this conversation just goes to show how desperate the search for housing affordability solutions has really become. And that really leaves us with this one big question to chew on. Is this the kind of creative, out-of-the-box solution we need to get people into homes? Or is it actually a dangerous idea that would saddle an entire generation with a lifetime of debt, turning the American dream into a 50-year financial nightmare? That's the huge debate this whole proposal has kicked off.